Hello, everyone. This is Debra Richardson, and today I am putting the AP in Happy, where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team avoid fraud, fines, and bad vendor data. So, sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. So, after last week's podcast episode revealing an IRS announcement, once the big, beautiful tax bill was passed, there is at least one more tax reporting change for tax year 2026 that can reduce a huge burden. But there is one more factor to keep in mind. Keep listening. Welcome to episode 346, a big IRS tax reporting change effective for tax year 2026 that can help your team. But don't forget about this. So, last week's episode was podcast episode 345, and it was titled What the IRS Just Announced About the Fire System. That will probably increase your workload. It will not be effective again until the tax year 2026, which you won't have to file for or implement this new change for until you won't use it until 2027, that January to March timeframe. But you do have to prepare for it. So go ahead and listen to podcast episode 345 if you missed it. And then a few podcasts back, I had podcast episode 337, and I talked about April changes to the 1099 MISC and to the 1099 NEC. And so if you go on the IRS's website today, you will see that the 1099 MISC and 1099 NEC and the instructions have a revision date of revised April 2025. Okay, so I have those two podcasts, but I also have something else that I did for tax year 2025 just recently as a vendor master file tip of the week, which I try to have those under 5 minutes, but it is a video on YouTube, and I talk about the IRS 1099 MISC, the NEC, and the 1042S 2026 due dates again for tax year 2025. So go ahead and check that out. It will be a link in the show notes. So if you're interested in, go ahead and check that out. Now, before I get started with the things, the one big change, and then what else you have to make sure you do not forget about, I do want to give you the sources that I use for this because the big, beautiful tax bill was just recently passed, and I'm sure it's still being disseminated. There is nothing on the IRS site about any of the changes. as a result of the bill. And I will say that the podcast last week with the announcement on the fire system, that did come from the IRS. But I haven't seen any of the changes. Maybe I just don't know where to look. Maybe I didn't get an alert of it. Maybe they haven't posted it yet. But I will say, I do want to note the places that I did get this information from, and I'm going to put them in the show notes. And two of them were articles from the Journal of Accountancy. So they are available to you if you, even if you are not a member, because I have access to it as well. And then I found a site called Taxes for Expats, and it talked about the One Big Beautiful Bill and what it means for business taxes in 2025, even though the change is not going to be effective until 2026 for us. The change that we're talking about for us and reporting vendor payments. Now, for other types of tax issues in that article, they're not applicable to us. They are applicable to expats, and they may be applicable. That information may be applicable for tax year for business taxes in 2025. So just know that when you get to that site, it's going to have much more information. Actually, each of them will, because it's not just, 1099s with vendors that are affected, it's other taxes as well. So again, I'm going to put those links in the show notes if you would like to read those specific resources that I used. So, all of that to say, really, one thing that really affects us that can be a help to your team because it really reduces the burden. And that is that for tax year 2026, the independent contractor threshold increases from $600 to $2,000. And what does that really mean? Well, that means that if you paid a vendor $600.01, now you no longer have to report that vendor if they were a reportable vendor. And so that can definitely reduce the number of forms that you have to generate for your vendors. And I will tell you that when I was a practitioner, we would send out, anywhere between 24 to 30,000 1099s, and the majority of those were because it was non-employee compensation, and we were reporting that those payments to the IRS. Now, I'd be curious to see if I were still in that position, how many forms that would reduce the total number of forms to. Again, it was anywhere from 24 to 30,000. Wow, it would probably really reduce. I don't know if it would be by half, but I think it would be a significant amount. And so, but one thing, so now you know what the big change is that they have increased the threshold for non-employee compensation for $600 to $2,000. Now that you know that, though, there is still one little thing that you can't forget about, and that is the states. Now, there are certain states that do not participate with the IRS's combined federal state filing program, which means if they do, if they do participate, then any forms you file with the IRS will automatically be filed with the state. And so, with the states that do not participate in that program, you still have to file those forms, set 1099 forms separately. And so, you have to do your research on those states to verify what their levels are. Also, there, even if the states do participate in the combined federal and state program, there are some states that still require you to do certain things separately from the IRS. So a great example is some states, even if you pay right the withholding to the IRS, if you have vendors that have backup withholding, some of them require you to still uh, file the 1099s with with their state if you've had any backup withholding. And so all the states can be different. And not only that, each of them can change their participation with the combined federal state program or other requirements surrounding tax reporting on an annual basis. So you always have to check. And so what I used to do and what I recommend that you do as well is every year you identify what vendors, reportable vendors you have, and pull them out of the system. And also make sure you are pulling the state that they exist in or that where they are located as well. And make sure you check all of those states. Hopefully, it's not all 50, but even if it is, you need to check and just see what their requirements are. I used to do this again on an annual basis. I would assign someone to pull the reportable vendors from and actually, I don't even think it was reportable vendors. I just told them to pull all vendors and check all states, right, where our vendors have nexus in. And no, it could have been just reportable vendors because that would have ended up being all 50 states more than likely because we had 140,000 vendors across 7 different ERPs. Some of those were non-US, but we probably had vendors in every state. So I probably had her pull or had the person pull just the vendors that were reportable. Check the states that they exist in, and then for those states, go to the site and identify what the requirements were for that year, for that tax year. Now, these changes only happen or are effective for tax year 2026 that you'll be preparing and filing for in 2027. So it might be a little early for that, but you know what? Tax year 2025 is coming quickly. And so you still need to check your states for tax year 2025. And so that's a great thing to put on your checklist to get done, not only this year, but also especially next year, because we know the IRS has some changes and the states may make changes as well. And really, the states have been very active in some of their changes ever since the IRS accelerated the date of filing non-employee compensation to January 31st, back when it was still on the 1099 MISC. Ever since then, the states have been, I mean, they had to adjust, right? So with that change and subsequent changes, they have been making their own changes to requirements. So you do need to check them every year. And speaking of checking the states, so if you are on the vendor process training center, you do not have to be a vendor process training member. All you have to do is sign up for a free account. And I actually do have links to the states website. So I actually have two links. One is for the business entity search in case you're searching for a vendor. The other one is to the Secretary of State site, which gives you the tax reporting information. So I will put a link to the resource library where it is included on the Vendor Process Training Center. You'll probably have to scroll down because I don't think I have tax reporting or tax information at the top. You'll just have to scroll down to the tax reporting section, and then you can link to the state sites, to the tab that has the state sites. All right. So thanks, everyone. I hope you enjoyed the 346th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.